Well, howdy there folks, and welcome into today's video. A few subjects I want to talk about in today's video. First off, we're going to talk about something strange going on with my stocks here today. Secondly, I want to talk about Cathie Wood. We haven't talked about Cathie Wood a little bit. I want to update Cathie Wood, and specifically, she has made here a massive position in a stock that I want to talk about this stock because I'm like, this is now her second biggest position. I'll kind of give my 2 cents in perspective on that. The third subject I want to discuss in today's video is around sentiment and sentiment with certain stocks, because I was just looking at a whole bunch of stocks right now that are at 52-week lows. And you would assume, based upon the earnings these companies have and how strong the numbers have been, you would assume these specific companies would be near 52-week highs. And I never really touch on the sentiment subject almost ever on the channel, but there's no doubt sentiment matters, and it matters in a massive, massive way. And by the way, I also want to thank Masterworks for sponsoring today's video. We appreciate you, Masterworks. I'll tell you guys a little bit about Masterworks in just a bit here, okay? So first off, honest, isn't it interesting? I come out with the video, late last night, as we all know, the April Fool's video, and Honest sells off 5% today. Tattooed Chef down over 2% today. Corsair, the 3 stocks I talk about the most that I personally hold, all down here today. And there's a good amount of green out there today. A lot of stocks are green. The indexes, some of them have been green today, some of them have been red, but it's just interesting. It's like, did some people just like see that and just like, oh, Jeremy must be selling, I gotta sell? You never really know, but it is very, very strange that all on the same day, all those stocks all happen to just move down. Okay. I don't know about that. Alrighty, so that's a small subject I want to talk about here. The next subject I want to talk about here, retail trader investor stocks here today. So AMC having a bit of a tough day. And this is interesting because I don't know if you guys saw GME, which is AMC's kind of, let's call it big brother. So GameStop had made this like insane move basically kind of yesterday, and then all of a sudden it just kind of gave up all the gains. And I don't know if you guys had seen after hours, it was up huge, and it was like all this excitement around a stock split and things like that, and all of a sudden it just kind of fell. And same exact thing with AMC. So that's just intriguing, I guess you can say there. Now, Cathie Wood, let's talk about Cathie Wood for a moment. So first off, when it comes to Cathie Wood and the ARK ETF, which is the main ETF ARK runs over there, this has been on a pretty stellar comeback on kind of the DL. So this is up about 28%, almost 29%. Since probably March 14th? Yeah, March 14th. So since March 14th, so a little over 2 weeks ago, ARK is up almost 29% for that ETF. So it's made this kind of epic move. Now, the interesting thing, so basically what I went to cathiewoodstocks.com, which tracks Cathie Wood's, top 25 positions on a daily basis, and I added her, top positions here. And what's interesting is obviously Tesla's still number 1, but Coinbase, and by the way, look at Tesla since that March 14th, unbelievable move, almost 42%. But Coinbase is our number 2 biggest position in the ARK ETF now, okay? And so Coinbase, this is, obviously we all know the crypto market's getting bigger and bigger. Everybody knows that, right? And more folks will be attracted to crypto over time, Bitcoin, Ethereum, and other cryptos. I think we all know that. But Coinbase, like think about the amount of competition in the crypto space on the crypto brokerage side. You got so many companies. You got the company that, I have a long-term deal with now, FTX, who's probably has, in my opinion, the best product in that space. You obviously have a company like a Voyager who's been competing there. You have all the other crypto exchanges and brokerages that have been competing in that space for many, many years now. You've got every single stock brokerage wants to start adding in cryptos, and you've even seen it with companies like Robinhood recently, right? I don't know of one stock brokerage that isn't at least working to potentially have crypto on their apps or on their websites as well. And the reason being is crypto can be very, very profitable. So, and don't be surprised if the big banks try to get in this as well, okay? So all I'm seeing is a lot of competition. So Coinbase, good company, but man, is that such a competitive space. And I'm like, think about it like this, right? Is there any way we can say, yeah, Coinbase is so much better than this company or that company? No way. I truly believe this. With how much I've done research in FTX, I think they have the best product in the market. And so if you look at this and it's like, Coinbase doesn't clearly have the best product in the market. It's not like a Tesla situation where it's like, yeah, Tesla has all these old school car companies that are going to try to compete with Tesla, but Tesla clearly has the premier products in the market, and by a mile. Coinbase, you can't say that at all. And so for that to be her second biggest position now in the ARK ETF is just, for me, I thought that was kind of surprising. Teladoc's her third biggest position. Teladoc's come back really strong past few weeks. Look at that, 45% move in a matter of a little over 2 weeks. Roku's been one I've always had question marks about, to be honest, though. So that's nothing new for me with Roku. Zoom is one of those that, that's another one that it's like, man, do they really have any technology that's really that special? They were the kind of first big name in the virtual conference space, but the more I think about it, I'm like, why can't Apple just emulate what Zoom has done through their FaceTime product and make it a little more business friendly? And already, basically Apple's starting to make it where you can create links to FaceTime. Like, it seems like Apple could try to emulate a product that's just as good, if not better, than what Zoom has, pretty darn quickly, in my opinion. Square's one of our biggest position. I think, I've actually liked Square, and specifically it was trading under 100 for a little bit there. Look at this. Back on around that March 14th time, it was $93 a share. I will say that. Exact Sciences I don't follow on a high level. Same thing with Unity, Twilio, Spotify. So when you see the moves these stocks have made since March 14th, you could understand how the ARK ETF has made such an insane move. But yeah, I would love to hear your guys' opinion on our second biggest position there. I was looking at that and I was just like, man, I don't see it. I don't see it there. I mean, like I said, it's a really good company, but there's so much competition in this space over the coming years. It's ridiculous. If we take a peek at Chinese stocks, everything's Chinese stock-wise is doing pretty darn well today. NEO stock, a lot of people have been looking at this one recently, right? During a time period of high inflation, uncertain monetary policy, and real estate that has gone sky high, it's more important than ever to consider diversifying across asset classes. Did you know that contemporary art is one of the oldest assets in the world? Prices have outpaced, listen to this, the S&P 500 total return by 174% from 1995 to 2020. And listen to this extraordinary stat. According to S&P Global, 94% of fund managers couldn't beat their respective S&P indexes. So how does an average investor ever get a chance to have a better than average returns? Well, you got to look in different places, right? We talk about some of those on the channel, stocks that most folks don't know about. You get the idea. But the alternative investments I'm most excited to share with investors here today that they might be overlooking are blue chip art. Art has been quietly outpacing the S&P by 164% from 1995 to 2021 and almost doubles the appreciation of real estate, gold, and 90% of cryptos out there. So why aren't more people investing? Well, think about it for a moment. It takes millions of dollars to buy a Picasso, maybe more than that. So contemporary art has been just inaccessible to the masses for a long time, and it's only been available to the global elites. But that's until now. I'm excited to share it with the community here today and give priority access to our sponsor, Masterworks, here today. Masterworks uses over 60,000 data points to find financially attractive works of art, buy them, and let you invest in shares representing an investment in that painting. The results? Well, in 2020, they returned 32% to investors, and in 2021, they returned 31% from a sale of 2 paintings, one being a Banksy. With results like that, it's no wonder 325,000 people have signed up. If you want to take advantage of this and check out Masterworks, check out the pinned comment down there. Click on that, learn a lot more, and skip the wait list. Check that out, pinned comment. So it's come back huge off those March 14th lows. Stock's now up 54% plus. But do keep in mind when it comes to NEO, this stock is still down a lot. I mean, you go back to June, this is a $52 stock. So it's fallen quite dramatically. And if we go back to January of 2021, this was a $60+ stock. I think it technically peaked at 70 something, but this chart doesn't show it. So, NEO, they've done a really good job growing the company. It's just, if you don't live in China, it's hard to kind of get a gauge on NEO sometimes, and like what the consumer preference is there and how much folks like it. Big tech here today, as far as if we look at all the big tech, mixed bag out there. You got Apple, AMD, Nvidia down, Netflix down. You got PayPal, which has been very, very undervalued for a while. And if we pull up a March 14th on PayPal here, Should be somewhere, right around there. Well, actually, PayPal bottomed a little before March 14th. It bottomed around March 8th, which is interesting. So that's about a 23% move. If we go to March 14th on PayPal, we're right kind of in this range, roughly. And about 20% for PayPal so far. So kind of a mixed bag when it comes to big tech. Now, something interesting I want to show you guys here is I was looking at some of these stocks last night, and I was looking at like the home builders, right? And so let's pull up a 1 year, and let's go to some of these home builders, right? Toll Brothers is basically right about a 52-week low right now. Lennar, another massive home builder, right around a 52-week low right now. Pulte Homes, right around a 52-week low right now. KB Homes, right around a 52-week low right now. Century Communities, another massive home builder, right around a 52-week low right now. So you're looking at all these companies that build homes, right? They're all around 52-week lows. And this is almost shocking. And the reason this is almost shocking is, think about it. All these companies' earnings are at record highs, like the best quarters they've ever reported, the best years they've ever reported. And so to see the numbers be so amazing for these companies and be at 52-week lows is telling, okay? And we'll jump into that a little more. Home Depot, right around a 52-week low. Lowe's, a little above a 52-week low. That one's been holding in decent. This company is a rental company, so they're doing pretty darn good. Rocket, obviously very reliant on refinancing, mortgages, things like that. 52-week low. RH, high-end furniture, 52-week low. Okay, and RH is coming off the best year they ever had by far and away in their company's history. Record revenues, record net income, record everything. Okay, but what's going on here beneath the surface with all these sorts of companies? This is what you call sentiment changing. And so when it comes to these companies, everybody's looking at them and they're like, yeah, those companies just had record revenues, record net income, record margins from almost all of them as well, record everything, right? And are reporting a great quarter this past quarter, probably another great quarter the next quarter. But the way everybody's looking at this is they're saying, you know what, or at least everybody on Wall Street, interest rates are going up. I think these companies' best days are behind them for the short term, and so I don't want to be anywhere involved with these companies if their numbers start to go like this. And I will say it's not far-fetched to imagine that a lot of the housing companies are right around peak revenue, peak margins, and things like that. It's very much a possibility. And could those start dropping in the back half of this year? It's definitely a possibility. And no one wants to be part of a story in a stock in which the story starts to get worse and worse and worse, and revenue potentially starts to decline. Net income starts to decline. Margins start to decline. And so if you look at all those housing plays, those are all definitely possibilities that we are near peak in real estate, right? And we could start going down. And so that's why you can't find buyers for these stocks right now. And so although a Toll Brothers just came off an amazing quarter and an amazing year, you can't find a buyer for that stock. It's at 52-week lows because people are looking and they're like, yeah, Toll Brothers numbers are great right now, but wait for 6 months from now. Wait for 12 months from now. That's when you're going to start to see this happen. And like I said, no one wants to be part of those sorts of stocks. RH, their numbers are so insane this past year. It's insane. Like, look at their last quarterly report. It was ridiculous. But you can't find a buyer for RH right now. This stock's at 52-week low. It's at actually a multi-year low. The last time RH was this low, you have to go back to 2020. Last time this stock was this low, you have to go back to 2020, right? And it's down, well over 50% now from basically where its 52-week highs are. And so RH has a great long-term story. It's had great numbers in the past. No one wants a piece of RH right now. And so this is why sentiment matters a lot in the short term. No, for a long-term investment standpoint, these are tremendous opportunities. When the sentiment gets very, very negative, right? That's usually when you get some pretty good opportunities. And so sentiment could be very negative in housing stocks for a bit, right? Unless magically the numbers just continue to be great and great and great quarter after quarter after quarter and they don't go down. But it's definitely not out of the realm of possibility for the housing stocks to be in a tough place, for companies like a Home Depot, RH to be in a tough place for a while, because it's going to be tough to switch that sentiment. Because here's the thing. even if they report a great next quarter, people are still going to be saying, okay, they reported a great next quarter, but you know what? The next quarter, that's when it's going to fall. And so when you have this negative sentiment, if you are a long-term buyer, that's when you get some pretty extraordinary opportunities, while almost everybody just is kind of negative around that sector, right? And so if I think about, a lot of the housing stocks and whatnot, those could be opportunities down the road. I'm not ready to jump in those stocks now because it is very, very possible that the numbers could start to worsen, revenues could start to go down in the back half of the year. Home buyers start to dry up and those sorts of things. And it could be very, very possible that here in the front half of the year, we are in peak real estate market and things start to slow considerably. And if things were to start to slow considerably, likely home builders would have to start bringing down prices to attract buyers in, right? They've had it easy for the past few years. Everybody's let's just be honest, selling a home for the past year and a half has been cake. Doesn't matter if you're selling a used home or a brand new home. It's been easy because you've had so many buyers coming in and just, what do I need to pay? And if we are near peak for that cycle, right, which is the way a lot of folks look, they don't want any piece of those stocks. And so if you're a long-term, buyer, you could get let's call it a 6 to 18 month window where you could add shares of certain stocks. And, I do that all the time in certain stocks that have negative sentiment around them because they didn't hit a quarterly numbers or they missed several quarters in a row. The long-term story is intact. As long as the long-term story is intact, right? Like that's what counts. A company like an RH, has a great long-term story. A company like a Toll Brothers has a great long-term story. But Wall Street doesn't care about that long-term story if the short-term's not right and the sentiment's not right there, okay? So, yeah, thought that was worth covering. Hope you guys enjoyed this video as always. Let me know your opinion in the comments section. Much love. Don't forget to check out Masterworks. Thank you, Masterworks, for sponsoring today's video. That will be pinned comment down there. It is definitely worth checking out, guys, and have a great day.